Hi, and welcome to Sanford's Software and Internet Monthly Market Report for March 2024. As usual, we're going to be reviewing the previous month's M&A and venture capital activity across the entire US and Canadian landscape. So let's dive in on the M&A front. So in March, we saw $48.3 billion of dollars invested across 84 transactions and a median revenue multiple of 6 times for the year-to-date period. As we can see on this slide, the surge in deal value is really driven by several large transactions, the most notable ones being Cisco's $28 billion acquisition of Splunk, Tronic Ventures' $12.3 billion acquisition of Tronic from JBB Advanced Technologies, and Insight Partners and Clearlake Capital Group's $6.4 billion take private of Alteryx, which closed last month. And then also on the Canadian front, we also had Montreal-based Plusgrade, who sold a 50% stake to General Atlantic for $740 million as well. And then looking at things on an annual basis, because of the several large transactions completed in March, the annualized deal value is now tracking much more in line with 2023 figures, but still expecting to be down 24% year over year. Accordingly, the number of transactions continues to decline from the COVID peak we saw in 2021, albeit at a slower pace than in the prior 2 years. We're currently tracking to be down 12% year over year on number of transactions. And now on to revenue multiples. So in Q4 2024, the median revenue multiple across software transactions sat at 6 times revenue. This marked a quarter over quarter increase of 18% from the 5.1 times revenue we saw in Q4 2023. And then consistent with prior reports, software assets are really trading in a tight range right now. And you can see that through the tight spread between the 25th and the 75th percentile in recent quarters, and especially the last quarter, Q1 2024. And then looking at SaaS versus non-SaaS revenue multiples, there wasn't much of a SaaS premium, as you can see here in 2022 and 2023. It was really just until recently that we're starting to see that gap widen a bit like we did during COVID and prior periods. SaaS companies right now are trading for a median revenue multiple of 6.6, whereas non-SaaS companies are trading for a median revenue multiple of 4.1 times. So there's really a SaaS premium right now, at least in 2024. And now turning over to monthly transaction volume. So we saw 84 transactions in March, which marked a 24-month plus low and stood well below the trailing 12-month average of 112. We're still experiencing a general downward trend in deal activity that will likely only materially reverse once we start to see central banks start cutting rates and creating just a little bit more market optimism, because there's obviously a lot of uncertainty and volatility right now. So that's it for the M&A side. So now we'll turn over to the VC side of things. So the month of March saw a total of $4.1 billion invested across 441 transactions and a median deal size of $4 million. Although there were no mega $1 billion deals this month, there were several larger sized financings. In fact, there were 10 transactions above 100 million, 17 transactions above 50 million, and 41 transactions above 25 million. So quite a healthy volume from that perspective. Now looking at monthly stats, so similar to M&A, VC activity continues to be on a general downward trend. March is currently sitting at its 24-month plus low and still remains well below the 12-month average of 572 transactions. Now looking at things on an annualized basis and over a longer time frame, this chart certainly looks a bit uglier than the one that we showed on M&A. So on an annualized basis, we expect to see approximately 5,900 transactions, representing a year-over-year decline of 25%, and $42.6 billion in deal value, representing a year-over-year decline of 37%. So as with the M&A market, VC activity will most likely only recover materially once central banks begin cutting interest rates and just, again, creating a little bit more market optimism. So lastly, let's discuss VC multiples. So far in 2024, early stage valuations are down about 18% year over year, while late stage valuations are up 8% year over year. Mid-stage valuations have really taken the hardest hit and are down about 66% relative to where last year finished. Although I'd be surprised if they really finish the year with that sort of decline once we get a few more data points throughout the year. So that's it for this month's report. We hope you enjoyed it. And if you have any questions, don't hesitate to reach out. Thank you.